realized vol popping back higher after we broke 100K. So both assets are now, yes, I'll put, and not both assets. Both assets are now realizing in the 60s. So Bitcoin realized jump from like in the 40s into the 60s. ETH has kind of been in the 60s for a while and is very slightly higher on the week. You can see from these charts, though, we had some breaches. We had quite frequent breaches of the implied ranges, which are showing you just how choppy the price action has become, right? You look at the previous week, Bitcoin didn't manage to really breach any of the implied ranges at all. And the intraday moves were quite small on some days. Whereas here, the intraday moves are getting quite wild on some days here, and we're breaking through the ranges. So really clearly see there the kind of extra realized vol we're getting both on a close to close and a high low basis. ETH, similar story, breached 1, 2, 3 times, having those really big intraday swings. On the days where we didn't have big intraday swings, we were actually very, very stable. But in general, these OHLC charts showing quite a lot of volatility, I would say. Carry wise, we are in negative carry on Bitcoin, but we are in positive carry on ETH. So a bit of a divergence there. We have had positive carry on ETH for quite some time, though. That vol has generally been trading a bit elevated, but that carry's slowly eroding and coming down a bit as that 1 week vol, is seeing a little bit of selling. And then Bitcoin, basically I would characterize that negative carry by the fact that realized has jumped, but implied hasn't jumped as much. Is not able to keep pace with the realized because options sellers are there taking profit on options and keeping a bit of a lid on the vol, basically. Okay. Now, it is likely that we remain choppy, as I've already said. I think the 85K, 105K range is the one that's established itself. I think there's a very high likelihood the 85, 105 range doesn't get breached between now and year end. So famous last words. I'm not going out and selling loads of Gamma myself, but in general, I think if I was going to sell Gamma, those would be the bookends that I'd be leaning on for the range that's going to kind of hold between now and year end. Here are the term structures. You can see a little bit of a pop in the front end vols, back end vols slightly higher, nothing too crazy. See on the charts here as well, we've got about a 3 vol point rise out to 20th of December, and then about a vol point after that, and not a lot going on in the back end. And then on ETH, similar story in the front end, 3 vols, back end ETH vols a bit better bid at 2 vols there, as you can see in June and September. Looks like, like that move up to all-time highs on ETH, people thinking that we see that at some point later next year and still willing to pay up for some of those long-term options. Time series, got these back, got our charts working again. Time series here showing us on the break higher, we did see a big spike in front end vol that has reverted and we are at a much flatter curve again. And obviously, you do tend to get dip in vol, especially front end vol into the weekend. That seasonality throughout the week seems to be quite persistent. Similar story on ETH. ETH vol did pop quite considerably though, as ETH's gone a bit nuts, but that front end got as high as 85, has come all the way back down to around 70 there. All right, so that's kind of where we're at. Skew wise, we did see a bit of a cool bid, obviously, as we were breaking higher, but it faded pretty fast. The red line is the front end skew 1 week stuff that is now back at neutral, whereas the back end was more stable, sitting around 5 vols. And then ETH put skew coming back as ETH started to tumble and rejected that 4,000 area, but the cool skew still very, very persistent. You can see on the skew charts here, both charts in contango. Those are the blue curves. Front end call premium getting smashed down to 0 or even negative in ETH. Both assets have still got call skew though, a significant call skew in Jan. We go out to January looking at about 4 vols, which suggests that the market strongly believes that the consolidation that we're seeing doesn't really last past December. Now, so what this should say is those that believe that the consolidation has room towards 85 to 90K, which I'm in that camp. I think that it could easily have room into that zone, are being rewarded right now to enter bearish risk reversals in Jan or Feb, because we've got this call skew still of about 4 or 5 vols, right? So you'll notice the trade that I did that you've seen in the Discord this week was that I bought some of my calls back that I was short in December, which were part of a put spread collar. And because, we had that pullback, we blasted through 100K. I didn't buy them then. I waited for the pullback. We pulled back to around sort of 90, 697K, and I bought those back. And then whilst buying those back, I then re-entered a hedge via a risk reversal where I bought like the 90K. Let me double check. I'm going to see in my crypto trades. I bought the 90K. Yeah, I bought the 90K puts in February. I sold the 130K calls, and I net spent about $2,000 for that structure. Now, the plan is at some point to turn that into a put spread collar and sell a lower strike. I was just being a bit opportunistic that I thought with the market up here, we're a bit capped. Let's pull back. And then when I think the pullback is kind of extended enough, I'll bang out a lower strike put in February to get some premium back, right? So that would be how I'd be looking to play that hedge, right? So I'm being a bit opportunistic with it. Now, more sort of evidence like the on-chain data showing long-term holders taking profit. So I think there's some more weaker hands in crypto than there were. I think those weaker hands might need to be shaken out before the bull market can resume and go to the next leg higher. So that does concern me, long-term holders selling to short-term holders. Also, funding rates are still pretty positive, right? We're talking about 15 to 20% range on futures funding rates. That is still indicative of longs, speculative longs that may need to be shaken out, right? So till those funding rates do come back to something a bit more normal, there is clearly risk of a bit of a flush out. I don't think that's fully played out yet, right? So those are my thoughts there. Here on the relative value side, we mentioned, you've got quite a big premium. It's been there for over a week. This premium in ETH implied about 17 vols over Bitcoin. Obviously, the ETH Bitcoin cross has been all over the place. This vol premium, even though realized vols started to converge, right? And there's less than 10 vols between the realized now between Bitcoin and ETH. The fact that the ETH implied holding at 17 vols, I think you gotta put that down to the idea that traders fear what ETH can do, right? ETH, if it breaks 4,000, it can have this massive catch-up rally to like 4,500 or beyond, because there's so much headroom between here and the all-time highs that people are kind of fearful about just how gappy ETH can be. And I think that's creating a bit of a bid to the implied vol there in ETH, and that's why it's trading at such a premium. Yeah. If you are long ETH and you want to call overwrite against it, I mean, you're getting really decent premium in the front end, right? So I think that is a trade that people may want to consider. If they're long ETH, they don't think ETH's going to blast through 4,000 in short order, then maybe they can do some call overwriting against their ETH at these vol levels, right? That doesn't look like a stupid idea in my opinion, okay? I wouldn't do it in my whole size. You want to keep some upside if ETH blasts through, but it's starting to look and feel a bit like ETH had its chance, it's failed, and now, yeah, it's going to struggle basically probably to do that between now and year end, I reckon. Okay. Relative skew term structure collapsed as well. We did have a premium to ETH calls. It's gone away. Actually, you would argue in the absolute front, it's gone negative. So now ETH puts are more bid than Bitcoin puts basically, right, in the front end. Or, there's even less short-term optimism in ETH, let's say, right, via what that front end skew has done.
Hi, everyone. Thanks for making it to the end of the video. Remember, this is just a little taster of what we do at Options Insight. To get access to all our research, including my in-depth vol market insights, flows and positioning report, and my portfolio trades, and a whole lot more, you can sign up at options-insight.com. I'll see you soon.